Hello everyone, welcome back to the video. As usual, I'm going to go back to the stocks that I have highlighted in the email. And before I was starting to record this video, I was thinking how can I make the video more interesting, or how in a way it can help you in your trading. Well, the daily setup sometimes is quite obvious in terms of looking at the chart. And of course, in combination with the market situation, like for example, anticipation of interest rate cut, which sector is going to benefit more, that would help you to increase your chances of success. Okay, for example, last week I did not highlight or talk about CapitaLand Invest, Keppel Limited. So what happened is that all of you should know that CapitaLand Invest is dealing with properties, investment on these properties. And these properties are affected by interest rate because it increased their expenses. If you go through all the quarterly reports of the REITs, the real estate investment trust and CapitaLand Invest, right, or UOL or City Development, they have a significant increase of the interest rate charges, so therefore dragging their earnings. And of course, due to high interest rate, the mood of the business has gone down, and therefore the anticipation of rentals has gone down, and therefore it could also impact the property business. So what you can see is that all these property stocks are actually been thrown down to the low by the market. Okay, for CapitaLand Invest, for example, if you look at the chart here, based on the chart, you can see it was moving on a downtrend, hitting a bottom support at 247. So if you look at this support, it actually came down, touched once, rebounded, and pulled back again, and attempted to break down this support with this long lower shadow, as you can see from the screen over here. Okay, and the next day it start to recover above this support. Okay, what you also observe is that during the day where it attempted to break down the support, it failed to break the support as it closed above the 247 level. So the next day it tried to recover, but before it recovered, it had a sell down, testing the support again, and then a strong recovery to push it back up to close even higher. So through this chart, you can see that the support has been tested 3 times. 1, 2, 3. So this support tested 3 times and it wasn't compromised. And therefore, it had a strong so-called buying support over there. Strong buying sentiment, strong buying demand over there. And next is to see whether is there any follow-through buying. So what is follow-through buying? Means that now today I close high. So I close high at 251. Tomorrow I see close even higher. So say close at 252, 254. That is called follow-through buying. So if the follow-through buying is strong, it hit 256 and break out above 256 means that there is a strong demand and the buying momentum is strong. And therefore, it has a chance to continue higher, potentially going to the next resistance at 262. And if it can continue to clear the resistance, then the next ultimate resistance that we're looking at is 284. Okay. Now, of course, in between during the chart, I must apologize because I missed out one small resistance over here at 275 thereabouts. But it seems to be a non-event at that level. Okay, later on I'll show you the chart. So this is how I come about highlighting this counter, because I noticed that in this downtrend, okay, it has shown sign that is willing to hold at support level. Okay, this is the first sign. Second is that if it really have follow through buying based on this candlesticks reversal pattern, which is what we call the hammer. Okay, and it is also a harami as well, bullish harami. Next is that if I were to see that resistance is breaking, then I would know that this stock is bullish, because only when it's bullish, then it breaks resistance. If it's bearish, then it breaks support. Now, of course, if you were to use this plain vanilla, seems to be quite straightforward, but in the stock market, sometimes it's not as straightforward as well. Okay, because sometimes it can be a false break. Like for example, here it was a false break of support, then at the end of the day, it pulled back all the way up. During the intraday, you might be thinking this stock is a goner because it has broken its support, and then the volume was pretty high. You know, you thought that the sellers are winning, but actually the buying pressure is quietly accumulating that kind of momentum to push the stocks back up to close at the high. So there is a lot of observations in the stock market, and of course, as you trade long enough, you know that we tend to get so-called whipped by the market, or in layman term called fake by the market, where you think that it's bullish, but at the end of the day, it turned out to be bearish, where the sellers actually took the opportunity to push down the stocks, and eventually the stocks goes down lower and went on a downtrend. Okay, so there will be more examples for you later on. So basically, this is how I get to Capital Invest. So I noticed the support is pretty strong, so therefore I decided to highlight in the email. And Keppel Limited also the same. You can see the support get tested 1, 2, 3 times, and then it forms a one white soldier pattern. So I'll be looking for follow through buying, preferably closing the gap over here 597 to 603. Okay. Then when I don't highlight any stocks, means that that day itself, we have to keep a lookout for potential intraday opportunity, or during the day sign to get into opportunity. So then we talk about Singtel. I talk about Singtel. Okay, so Singtel is a different ball game compared to earlier Capital Invest and Keppel Limited. Okay, why? Because both of those counters was on the downtrend. But if you look at Singtel, Singtel is in fact in the uptrend. Okay, it's in fact in the uptrend, and what you can see is that Singtel has a strong resistance at 3.02, and it needs to break above this resistance to go to 3.22. So I'm waiting patiently for the counter to break out above this 3.02 to hit near 3.22 level. So therefore, I think Singtel has a chance to highlight. As I mentioned earlier on, it's good to combine with the market situation. Like for example, I talk about interest rate, where Singtel also has its own story. And the story about this counter is that it has been doing a what we call the asset enhancement exercise, where it is releasing the value of this asset and therefore helping to boost its share price. And when every opportunity arises, like for example, pulling back to support, okay, over here, you can actually time the entry to buy into such a bullish stocks. So if you look at the counter, like I say, we really have a good opportunity for it to break out and trade higher if it maintain above this level, where we are talking about this 20-day MA support, 290 support. So if maintain above 290, 20 MA support, then it will be strong. Next counter will be Dynamac. So Dynamac was on the uptrend. Okay, so you can see the uptrend over here. The result was fantastic. So their earnings blew through the sky roof, and then and it forms a one white soldier, bullish engulfing pattern. Okay, so one of the bullish reversal pattern in the candlestick reversal pattern family. And what you would like to see is, again, follow through buying and uptrend. And my thought was that oil price was doing well. This counter is dealing with oil, and the result was fantastic, and therefore there might be a chance for it to recover its upward movement by going back to its 62.5. But of course, for me, is that it's not a close an eye to buy type of counter where you don't really care what is the price. But in fact, we should be looking at the closing level, towards the closing level, to decide whether should we be entering or not. So this is my trading style. Normally, I don't rush into the stocks in early morning, but rather I will wait until closer to midday, 2 to 3 p.m. Then I'll start to take action. Why? Because this is where you can start to see whether is there any fake movement coming in, or is there any real momentum coming in. So Dynamax was highlighted. Then I highlighted Tencent, and Tencent was trying to move back up to 397. How do I know that it's trying to move back up to 397? Because I can see here there's a low, there's a higher low, and therefore, of course, breaking out resistance is important. 380 resistance got to break, then next is going to 397. So in this example, I use indicators to help me to ascertain the observation, where you can see MACD is actually moving up quite positively, okay, because it actually had a bullish crossover here, and then it's trending upwards, and stochastic is also trending upwards. So there is a good chance for the counter to really move up to hit 397 resistance. Then we have SATS. So what about SATS? SATS is actually in the middle of its bullish momentum, and if it can break up successfully, there is a chance for it to hit 392, right? So this is a bullish momentum play. So you need to identify the differences in terms of trading. Okay, a lot of people gives me feedback saying that, wow, you shouldn't be buying at a high. Well, buy high definitely cannot kill by market. You know, you shouldn't be buying at the low. You buy low, you might be killed by the market as well, because low can go lower. Now, all these are subjective. You cannot just take one pole and then just flip the boat and everybody sink into it, into the sea. So you have to actually analyze the situation to ascertain that, okay, now this high is worth buying, you know, where the stocks may even go much higher, like Singtel, for example. Okay, Singtel was trading at a high. If we continue higher, continue the trend, it will go higher. Now, for SATS, the same. Then on the flip side, we have counter trend, where we talk about CapitaLand Invest, we talk about Keppel. Now, all these have some story by itself. Okay, it's good that you know the stock story rather than just trade it blindly. Okay, so SATS, as everybody know, the result was fantastic, and the outlook was very strong, and therefore there's a high chance that it may continue to go higher. Okay, remember the keyword is may. It's not a must. Okay, so you have the higher chance, higher probability of success, then you can take the opportunity to trade. But of course, if it turned out to be wrong, then we got to accept it, and then either we decide to cut loss right now, or we keep on to the counter to see more development. Maybe you know, you may take even 4 to 5 years of holding this counter to see that possibility to happen. That is extreme case lah, but then I know that there's a lot of people holding SATS for many years, as even holding through the tough time where you went to $2 plus, you know, and finally see the day, like same like Sembcorp Industry. But all these are strong fundamental counters where they are proven over time. So therefore, you can actually, you know, if you are looking for long term, you're actually looking at these kind of counters for investment. But we're talking about trading over here. So SATS is about to go up. Then we have ST Engineering. Okay, so of course we have again have to look out for follow-through buying because it's showing a bullish momentum on its uptrend. From this bullish momentum, it had a low volume, declining volume consolidation where we're waiting for the buyers to return back. Now, if buyers change their mind and decided to dump this counter, of course, you do expect a change in trend. But for the time being, we are looking at the counter to go above 452, 456, or 460 to go to 481 target. So similarly for UG Healthcare, this is a bullish pennant, and we are looking for a potential breakout to go to a projected level. So what's the story about ST Engineering? Basically, at that point of time, you know that the global situation is quite messy, and ST Engineering is supplying arms to some of this conflict area, so their earnings are going up. And UG Healthcare was due to Mpox, right? Mpox is hitting several shores of different countries, and therefore there might be demands in gloves. Now, of course, we are not cheering that Mpox should be coming, but this is just pure taking advantage of the market situation. So next, just now was at UG, right? Then we have Sembcorp Industry. So Sembcorp Industry having a inverse head and shoulder pattern. If we break out 486 strongly, it may hit as high as 530. But of course, do take note, in between there's some resistance. Example 506, 5.06 resistance. Okay. Then we have iFAST and Aztec. So Aztec was consolidating positively. So how do I know that it's positively consolidating? Because you can see it's holding above its 50-day MA support. Remember that if a stock is bullish, support will hold. Okay. So it holds above the support and eventually hit back this resistance at 96.5. So if it breaks above 96.5, then we can see there's a chance for it to continue higher to potentially 1.02. iFAST, I was looking at this counter, trying to recovering from the low to hit back 7.4 resistance, but unfortunately, the counter got hit into a bad news. Got hit by a bad news rather. Got hit by a bad news where there are some short sellers saying that their business are not sustainable, their earnings are not sustainable, and therefore impacted the stock price. Okay, so we shall take a look at the chart later on. Then we have SATS again. Okay, SATS after breaking out, just now I mentioned it's about to break out. So after breaking out, it went to as high as 373. But it stopped there. It did not continue to go higher, and then it started to consolidate with a declining volume. So this declining volume suggests that traders are on the sideline waiting for miracles or for more clearer signs to appear before they break out the resistance at 373. So one day it said suddenly break out 373, then you can expect 390 resistance may be tested. Okay. Then we have SATS and iFAST update. So SATS, like I say, waiting for 373. iFAST pulled down because of the short seller news. You can see here before they pull down, the previous day where we were expecting for follow-through buying, it actually went up but closed down lower. So you know that during the day itself, it actually lost its momentum, and it is actually a sign of concern. And when it sell off, then you know that okay, the stock is not bullish yet. But currently, or the day, I saw a hammer, and this day was 5th September. And we expect follow-through buying on this hammer, and hopefully with this follow-through buying, it can push back to 715 new minor resistance. Okay, so this is all the stocks that these are all the stocks that we highlighted. So let's go to the chart here. So you can see Dynamac over here on the screen. If you look at the signal was here, so there isn't any follow-through buying. Okay, why? Because the next day it actually struggled to move up higher. So in this case, we shouldn't be taking any action, right? So we shall wait and see to expect the next happening, which is if either it goes back up on the next day above 595, then yeah, we can take a trade. But if it breaks below 55, then this means that the stocks is not going to do well, and therefore we should avoid it. So it did not break either direction yet, so you continue to wait. And when it breaks down, you know that, okay, this signal is over, and move on to the next counter. So speaking about CapitaLand Invest, as you can see, this was the chart where we highlighted it. So it was on a downtrend, but the market thought was that the interest rate was cutting because the Powell was saying that inflation was going down, and all the staff reasoning to cut interest rate, and therefore it should benefit the property counter, and we can see follow through buying the next day. So you can see strong follow through buying. Okay, as the stocks close solid with a white candle. Okay, and then it continued to move up. Now the key is that, remember the resistance that I mentioned, it must break resistance, continue go up higher. So you break out above the resistance about 256, 258. Then it continue to move up to test the next resistance around 264. And eventually it broke up the recent, and this movement is because there's a news. It break out above this recent at 275 because there is a news, and the news is that they are selling their rights in CapitaLand Ion Orchard to CapLand Income, and therefore now we are looking at the counter potentially hitting 284, but you can see some struggle right now as the market trying to digest the positive news. Okay, so if the counter cannot break above 284, then there might be some pullback coming in. So for Keppel Limited, it is not performing as good as CapitaLand Invest, but it still moved up to hit the resistance that we expected. So it did not break its resistance yet. So the thing that you observe now is that it pulled back from the resistance to form a minor support at 604 and retest a resistance again. And again, it cannot break the resistance and pull back down to 604 again. So when you trade like this, it means that it is potentially moving into sideways, because sideways means same high, same low. And also it tells you that it doesn't know whether it should be going up higher or not. So it's still waiting for that catalyst to happen. Okay, so it wants to go up, but lack the strong catalyst, and therefore come back to retest the support level. So when you come back down to retest the support level, say for example at 604, if it failed to go back to 622 and break out above that, then we will be seeing a change in trend again, and this change in trend could be a downtrend again. So watch closely 604 and 622. Then we talk a lot on iFast just now. iFast, well, the hammer has a hammer confirmation, okay, because the next day is still a hammer. But today, there's no follow-through buying for this hammer. So it tells you there's some lack of momentum right now. But of course, sometimes stocks takes a few days to react. So today, so long as it doesn't close too low, sustain above to 695, 696, that will be good enough. And for it to take more time to find its momentum to continue higher, Preferably, we want to see it hit 715 soon. Sets. So just now I mentioned about the consolidation. You can see sets gradually going up. So the key is that whether it will hit 373 and break up from there will be the critical movement for it to go to 390 target. Okay, so have to wait patiently. It takes a few days for it to come up and then also break its resistance. Singtel, like I said, uptrending stocks. Despite the pullback, it holds above the support level, breakout, and then it's going towards 322. Or in fact, it went to 320 already, 321. So it's there about. So don't expect 322 means that the stocks will trade at 322 exactly. Sometimes it might be higher, sometimes it might be lower. So it's sort of like fulfill the first target, but would it have strength to continue higher depends on whether it can break above 321 or not. So for the time being, we are still bullish, although you can start to see a few days of struggle yesterday and today, but it doesn't mean that it's a death sentence or death penalty. You have to wait out for that real momentum to come in, especially if you're holding it with some profits or deep profits, then it's fine. You can just wait out for that moment to come. Okay, no need to rush to take profit, or you worry about losing a chunk of your profit, you can still take partial profit, like 50% of your holdings. If you're holding like 10,000 shares, you can sell 5,000. Then we have Tencent. So we talk about Tencent expecting to hit 397, the resistance. But unfortunately, it didn't manage to do so yet because 380 recent was a tough nut to crack. So it has been consolidating, and today Hong Kong is closed, by the way, because of due to the typhoon. And we have to wait patiently for it to come out to break up 380. So while waiting, what should you be observing? You should be observing at every of the support level. First, it shouldn't be breaking the support. Second is it shouldn't be testing support too many times. So if you keep coming back to this support, say for example 365, okay, and keep hitting it 1, 2, 3, 4, 5, 6, 7, 8, 10 times, then one of these days the support will just break because it shows you that you lack the strength to break resistance. You keep coming back to support level. Okay, so it's kind of like a dynamic analysis, because some of you might be confused. Hey, just now you tell me support is good, but now you tell me keep testing support no good. There is a dynamics to it, there's a context to it. Yeah, so the context is that if you are looking at a bullish stock, so usually it tests maximum 4 times, it already move up. It doesn't come back and revisit 5, 6, 7, 8 times. It move up and doesn't look back. This is most of the experience of the bullish stocks. Okay, and I believe in the US, many have a concern with NVIDIA. What is NVIDIA doing, and why market keeps selling NVIDIA? Is it going to be bad? Well, NVIDIA is, I mean, is the leader when it lead the market when it was bullish, and then of course when the market is bearish, the first thing to sell is NVIDIA, because a lot of people buy into this counter. So therefore, when they want to take profit, they sell the counter, and NVIDIA gives them the most profit. So fundamentally, there's no doubt to it. Don't need to doubt about whether NVIDIA will be doing badly or not. Those fear mongers to publish reports saying that they have concern with NVIDIA, all this and that. But what you want to see is what the CEO says and what the quarterly report says. So they say that it's pretty strong. Then whatever analysts out there creating fear, they probably have an intention, which is to drive down the price so that they can buy lower. They probably miss that bull run. So if you look at NVIDIA here, we have some support over here where you can see the uptrend line here, where it has to be supported. Okay, so this support for NVIDIA is quite crucial. So NVIDIA shouldn't be revisiting $90 as what it did previously during the early August sell-off. So if we come back to this $90, then you form a double top where the market is driving it even lower before it can recover. This may present another opportunity for you to get in NVIDIA, to buy more NVIDIA. But if the trend NVIDIA like to stay strong, the trend will stay and it will hold at this 107 level thereabout. Okay, so I'm not too worried about the fundamentals. It's just that when is the timing for you to enter into NVIDIA? Should you be avoiding this counter for now, or should you be taking every opportunity that arises on this counter, which may have a potential to fail, but still have a chance to recover in future. So these are the things that you may want to decide for yourself. But for me is that I'll just take it as it is. And if the opportunity arises here where if NVIDIA were to rebound from this trendline support, then yeah, we can take opportunity to sell at 130. Or if you can break out 130, then we may wait for 139 thereabouts. Okay, so that's it for me, and I hope you find that this video is useful and can enhance your trading experience and then help you to trade better. Okay, good day and goodbye.